Private payrolls grew by 146,000 in November, according to data from ADP. The latest sign of a slowing but resilient labor market ahead of Friday's jobs report from the Bureau of Labor Statistics. Nela Richardson, ADP chief economist, joins me now live in living color in studio. Thanks so much for taking the time here today.
It's great to see you in person.
Always know it's a busy day when you have the national employment report that you're releasing here. And within the private employment and private payrolls data, I wonder what stood out to you the most, especially as this comes as a precursor to the monthly jobs report from the Bureau of Labor Statistics.
Oh, Brad, that's a great way to kick off this report. There's actually three things that really stand out to me. One is manufacturing weakness. We've seen that consistently for the past 2 years. Unfortunately, November was no exception to that. We're still seeing that weakness, and that was met with some good hiring on the services front, but still not the energy in some of the sectors like leisure and hospitality that we've grown accustomed to. The second thing that stands out is large firms did the bulk of the hiring. 120,000 of that 146,000 came from employers with more than 500 employees. That's something to watch as we look at interest rates and the effect on the small firm hiring. And the final thing to watch, and this is really important for the Fed, we saw wage growth tick up a bit in November. And that's meaningful because we're still trying to get to that 2% inflation. Right now, wage growth is still much stronger than it was pre-pandemic, and that might foil the best laid plans towards 2% inflation.
You saw my eyes light up as you started to discuss some of the pay insights. As usually is part of this report, cyclically, pay gains, they accelerated in November, as you mentioned here, but year-over-year gains for job stayers versus job switchers. What are you seeing there in some of the dynamics?
First of all, they both picked up. So we moved from 4.7 to 4.8 for job stayers. I know that doesn't sound like a lot, but to me, what it's suggesting is that we're stabilizing at just below 5% in job stayer wage growth, and that's pretty strong wage growth. The second thing to note is that job changers pay went from 6.7% in October to 7.2%. Why is that important? Well, job changers, as we all know, are the most sensitive to real-time labor market conditions. Right. So if they're getting paid a little bit more in November than they did in October, that tells you that there's a labor market out there that's still a little tight. And that is meaningful to the Fed.
What does this all mean then for the Fed, especially as it seems like the probability is pointing towards a rate cut, as we've had in discussions here with economists on Yahoo Finance, looking for a cut in December, and it sounds like even looking out into 2025, we could see one cut per quarter.
I think it means that they still have to be vigilant and not preset, because the data could turn pretty quickly. You could see this inflationary decline. I guess that's called disinflation, not an inflationary disinflation trend continue. But we also saw in the previous month that inflation has been sticky. And so as long as you have sticky inflation and strong wage growth, you can't be on a preset course to cutting rates, because that could come and bite you later. So I think they're still going to be very cautious, very data dependent. It doesn't mean that they don't cut in December, and in future months in 2025, they'll be more deliberate and, to use a football term, more likely to call an audible based on incoming data than we've come accustomed to with the Fed.
I like that. You know, just lastly, while we have you here, we've got an incoming administration that's really been focusing on efficiency, and it seems like that's starting to rattle through the mindsets of businesses. Is that starting to show up among private employers to you at all right now?
I think it's too early in terms of efficiency, but just writ large, employers are always thinking about efficiency. Their most important attribute is their capital, their labor, their workforce, and they're always thinking about how to make their workforce more productive. So this is kind of how corporate America thinks. It looks like it might be heading to the government now too. So we'll be watching and waiting to see how that all plays out there.
Nela, great to see you. Thanks so much for joining us in studio today.
Thanks for having me.
Absolutely.